You know, everyone in rates land, Matthew, has been saying this Treasury yield, it's over. It's over. I've been hearing this for weeks, and it just keeps going. So I hope you're right.
I mean, you know, we don't know exactly when it's going to be over, but we do hear a chorus of Fed speakers, especially last week, in a very notable way, saying that they are restrictive and that they can wait and see what happens with the policy filtering through to the economy. And if that's the case, then there's only so much more that the long end of the yield curve, which is more tied to mortgage rates, is going to rise before we have hit the ceiling.
I tweeted the 8% mortgage rate yesterday purposefully to see, you know, just what kind of psychological response there was. And nearly everybody, Matthew, responds by saying a crash is coming. A crash is coming. They either say it's unaffordable, an entire generation is ruined, or they say a crash is coming. What are your thoughts?
Oh, so many thoughts. First off, what Diana was just saying about supply is critical. So we need to decide how we're going to define a crash. Are we talking about a crash in home values? Because if supply is the tightest since the 80s, then it's really hard to get values to crash. 8% rates obviously pose a big problem for first-time home buyers. So, you know, that is a big issue. But when I think of crashes for the housing market and for the mortgage market, I think of things like 2007, 2008, and we're just not seeing the same sort of dynamics there in terms of risky loan profiles and risk-taking behavior among borrowers and pretty much everybody else in the sector.
Yeah.
So I don't think it's a crash. I think it's painful. I think it's ugly. I think the volume is tremendously constrained, and it's not pleasant for anybody that's either trying to buy a house or involved in the sale or financing of the house. But I don't see how it crashes the market. And in fact, if I needed somewhere to live and I was going to make a monthly payment right now, I would get a mortgage and buy a house.
Well, Diana, I always feel a little bit Dante-esque at the moment. I think about the housing market as just like the bottom of hell completely frozen over. And we can argue about who the figures are, you know, stuck in ice there. But that it feels a little bit more like that. Like it's almost like activity is just grinding to a halt.
Yeah, it's the real estate agents who are in that, you know, circle of hell that you're talking about.
I was going to put the policymakers there, but yeah.
Them too. But look, yeah, and you talk to the real estate agents, and what they say to me is, I've never seen anything like this before. I've never seen it frozen like this. We went to an open house, and we saw a lot of folks came out to the open house, but they were really just looking. They wanted to see if home prices were starting to come down. They wanted to see what the competition was out there, if there were other people, you know, looking in their price range. But all of them said, yeah, well, I'm not going to move right now. I'm not going to make a move or make an offer. I just want to see what's going on. And that speaks to this very strong demand. But I'm also interested in what the builders are doing with the mortgage rate write-downs. And Matt, I wonder if you know, is this going to pose any risk to the overall housing market now that we see more and more builders buying to write down the mortgage rates for their buyers?
All it really does is sort of artificially props up values just a little bit. If builders are paying points, you know, with their excess profits to buy down the rate to help buyers afford a little bit of a bigger house or more house in terms of the mortgage amount. But I don't know that it causes any sort of systemic risk. It's something that sort of nibbles away at the margins of valuations. But yeah, I also wanted to say to your point, Kelly and Diana, that, yeah, it is ugly. I mean, I don't think anybody in my community of mortgage originators would disagree that in many ways this is worse than the great financial crisis in terms of volume and activity. And it's definitely not going to come back in any appreciable way until rates start to come down. But I think when they start to come down, that you have a healthier level of demand and less fear about getting back into the market among the current crop of potential home buyers.
You know, to think of the extremes the housing market has been through in just about 36 months' time is truly just unbelievable. We'll leave it for now. I appreciate you both joining us today, Matthew Graham and our Diana Olick.